want to get into the habit of doing this um, just because it helps me review my week and it helps, I guess, whoever's watching kind of understand the logic that I'm kind of looking for. So this week, overall, it was a pretty good week. It was really tough. I would say it's good in the sense that I was able to capture what I wanted to, but it was tough in the sense that a lot of the times wasn't entirely didn't have, I guess, my narrative set or as much as I'd want it to be. So overall, good couple green days. What I don't like about this week was my trading frequency was a little too high. I got a little too carried away on some of these trades, even though they were small size. These are 50k top step express accounts, so I'm just kind of building that buffer now with a little bit of patience. Um, but I have scaled up to 1 mini now, and I'm trying to be very risk adverse, just cautious, but not too cautious. Okay, so let's actually review this week. Let's take a look. Let's review this week. Okay. So first and foremost, with every single kind of review that we want to go through is we want to outline the higher time frame open. So in this particular case, we had the open here, and so that was Monday. So Monday, Tuesday, Wednesday, Thursday, and Friday. And so a couple things to note here is that on NQ, we did take this high. And I was expecting a redistribution above this high, but I wanted us to go a little bit higher. And I'll get into that in just a second. But we all know that the way this kind of works is we have a consolidation and we have an expansion. And that's typically just the start of every move is either consolidation, or if you're catching an expansion, you're either going to be starting from a consolidation, from a reversal, or from a retracement, right? So in this particular case, if you want to view it from a bit of a lower time frame here, we had a consolidation from Monday, or actually from last Friday, up until Wednesday. And then on Thursday, we had, sorry, I'm just turning up my brightness here. We had an expansion away from that weekly open. And so one of the biggest tells, and one of the biggest things that I tell everybody is to look at the reactions that you get from your weekly opens or your higher time frame open, because that'll be incredibly telling. And so as you can see here, if I outline that weekly open and I head over to an hourly chart, you can kind of see that majority of these taps were redistributions. And so that's telling me something here, right? The fact that there's failure to kind of expand above that weekly open, and we're seeing complete rejections to the downside from this weekly open after reaching that kind of objective, it means that I could start framing how that candle kind of looks. Right, so I'm gonna take us back a little bit here on Thursday. Right, and so you might be saying at this point in time, I'm paying attention to the opens because open, hollow, and close. We're always functioning under the structure of an open, hollow, and close candle, no matter what. Right, so you have your rejections here, and then you have your rejections here. And I will be honest, this chop right here was a little bit rough. Right, it's obviously really hard to kind of predict when you will get a consolidation and such. But the idea is that you're paying close attention to that open. So what you want to do, and at least for my model, is you want to frame those two variables. And I can go so much as do the monthly, but for the sake of this example, there are a couple things happening here. We have a consolidation. We have zero willingness to close above that weekly open. And we have redistributions along the way. And so price at this point in time is telling me one of two things. Or two of two things, I guess. So number one is the fact that we're closing below weekly open. Number two is the fact that we are disregarding bullish arrays and respecting bearish arrays. And so to me, my order block formations consist of two things. So one of them is going to be a liquidity point, and number two is going to be an opening price, right? Because the formula for an order block, at least in my eyes, is an order block is going to form above or below the open, obviously considering what you're looking for. But in this particular case, if I'm looking for an order block above, or a bearish order block, I'm going to be looking for an order block above the weekly opening price, and that same candle for it to take a liquidity point. And so at this point in time, we had taken previous week high, which is right around here, I believe. We had taken previous week high. We opened high redistribution. And so all order blocks are typically accompanied, or at least high probability, order blocks are accompanied by a fair value gap. And so in this particular case, we had this imbalance here. And as you can see, we had a pairing of this imbalance. We had open high distribution and distributions above the weekly opening price. So always pay close attention to what price is telling you around these opening prices, because they will be telling the majority of the story, and then you're able to kind of frame what the higher time frame candle looks, and then go beyond there, right? And so in this point in time, what you want to be doing is a couple things. So pay close attention. If I'm expecting the weekly candle to look like this, right? If I'm expecting the weekly candle to look like this, I'm going to be expecting one of two things. I keep on saying that. Ignore me. So you have your weekly candle, your weekly open, right? And I'll make this a little thicker. That's your weekly open. So if you're bearish, you want to see open high and then an order block within this area, right? If you're bullish, it would be vice versa. But this gives us the context for a couple of things. Because the weekly open serves as our higher time frame for 4-hour or daily candlesticks, what we're going to be looking for now is to join the direction of that weekly candlestick, of where we're expecting it to close, is to join that weekly candlestick through the lens of a smaller time frame. In this particular case, we can use midnight for daily, or we can use a 4-hour open. Now, what constitutes these candles, right? What makes up a weekly candle? It makes Monday, Tuesday, Wednesday, Thursday, and Friday, right? Which means we have 5 midnight opens to utilize, which means there are 5 opportunities for us to potentially capture that same direction that we're expecting the weekly candle to close at. And so this is kind of where you derive your bias from. And so we know we have two logics that are true. We know that we go from external to internal, and we go from internal to external, right? If I'm framing the first, which in this particular case we are, because we took external and we took Friday's high, we're doing external to internal, which means that allows me to frame my bias towards the downside, and that implies that I'm going to be targeting an internal liquidity target, which is going to be an imbalance. So I'm just going to remove these drawings here. So in this particular case, if I'm expecting, for example, this imbalance or this imbalance, that means that to me, I want to see fine prints above midnights be absolutely rejected. Anything above midnight to be redistributed or form an order block above midnight that'll allow me to still continuously frame the idea that the weekly candle will expand towards the downside. And so let's hop into one of these examples and take a closer look. So let's take a look at Friday. And the logic is fractal, which is what I'm trying to which is why I'm able to scalp those lower time frames, because I'm applying the same logic across all. So in this example here, we have, I was using the wrong. In this example here, let's do, okay, so here's midnight, right? Here's midnight. And same exact example as that weekly open, right? We have midnight, which is our fair valuation for sells if we're looking for above the opening price. And then we have an internal liquidity point. See if I can find it. think the 30-minute chart might work best. Yeah. So you have open, high, distribution, and as you can see, price did the same exact thing as it did with the weekly open. It has the same similar characteristics. You're looking for that redistribution above that opening price. And what you can do is you ask yourself, what obvious liquidity point was taken? And in this example, we can just use this one here, right? Which is previous day high, or previous day. And so you ask yourself, what group of candlesticks were above the opening price that took a significant liquidity point, where if I were to see a close below, it would demonstrate, or at least show me a change in the state of delivery that I can then look to frame as an order block. And so in this particular example, I would be using these candles here. And inherently, you're already using an inverse with the formation of an order block, because during the formation of an order block, you'll likely see that it has either an inverse, a fair value gap, or a combination of the two, which, for those that are familiar with the concept, it would be a BPR. So what you're doing is you're taking your high time frame candle, you're kind of picturing where you would want to see it close. You're kind of using a logical. I always tell this to those that ask me about my buys. It's if this were a 5-minute chart, what would you imagine this to look like, right? Because we've seen a lot more 5-minute charts, or a lot more 5-minute candlesticks print compared to a weekly or a monthly chart, right? But the logic kind of remains the same, and the prints kind of remain the same, although there are different nuances across some of these time frames. For the most part, if you've seen a lot of 5-minute candlesticks print, you can kind of derive at a logical point, or at a logical narrative where you would want to see the candlestick close. So in this particular case, if I'm looking to frame a bearish weekly candlestick, that means that I'm going to be looking to frame order blocks above the weekly opening price, and as well as above the midnight opening price. And the logic remains the same, and I'll show you another example here. So if we were to take, for example, let's take, for example, an hourly candle. An hourly candle where there was a redistribution, right? So in this instance here, when was this? This was today. I'm looking for one from today. Wow. It was a large drop. Okay, let's just take this one for example. So as you can see here, the structure here was very, very simple. And we can see that, obviously in hindsight, the candle closed below, right? It closed lower, which means it was a down close candle. So if I were to zoom in here a little bit, take that opening price, what do we see? A couple things. We have an opening, right? We have a high. We have an internal point taken, which means I'm going to be targeting external, just for the sake of the example. And so the last consecutive candles that were part of that move that led to us seeing this expansion lower, as soon as we get a close below that low, as you can see, it's above that opening price, which means we're in an area of fair valuation, right? For sells in this particular case, right? Because we have a clear downside trend. So you have your open, you have your high, and so this is going to be the high that's in place, or at least we're trying to frame as in place. And so that's kind of where the two variables come into play. If I were to break this down into two simple variables, there are one, which is my target, which is going to be my original consolidation in the direction of the trend. That's number one. And there's number two, which is my smart money reversal. And so my smart money reversal is going to be denoted by a couple things. My smart money reversal is a formula of time, price, and so in this case, we're using both time and price in the sense of the opening price, right? Because fair value above for sells, fair value below for buys. And so what I want to see is I want to see open, high, into a PD array, right? A fair value gap, etc., etc., and then a redistribution back below those consecutive candles that took that liquidity point, or a distribution below the opening price, into below the opening price. Because now what happens here is that I have a formula for open, high, low, and close, and my hourly candlestick looks a little bit like that, right? And so again, the same exact thing. What am I looking for here? I'm looking to frame an hourly candlestick open, high, low, and close within the context of what the daily candlestick or what I want the daily candlestick to look like. And so in this case, we have, let me mark out midnight. We had midnight here, very, very low, small rejection above there, expansion, expansion. And so during this trend, I'm going to look for a higher time frame candlestick open, in this particular case, that hourly. That's going to let me or allow me to frame open high, then distribution below into what the daily and what the weekly candlesticks are telling me. The more time frames, or let me write this down, the more time frames you can align, the better the expansion. And that's honestly really simple. It's such a simple logic. But what you want to be doing is using opening prices across multiple time frames, such as the 10 a.m., which is also equivalent to a 4-hour open, an hourly open, etc., etc., right? So you want to be using these opening prices that not only represent a single candlestick, but that can represent multiple candlesticks across throughout the day, which is why 10 a.m. is so significant, because it not only represents a 15-minute open, a 30-minute open, it represents an hourly open, it represents a 4-hour open. So you can kind of frame yourself inherently by just using the 10 a.m. open, because you're going to be using multiple, or it's already going to align you across those multiple time frames. And so I wanted to keep this really short and simple, but I want to be doing more of these. I'm going to get a better camera. I'm going to get a better mic. And we're really going to get into these. And I will be doing trade recaps as well. So let me know if you guys have any questions. Please let me know. Or if there's anything else that you guys would like to discuss. I would love to hear from you all. And yeah, let's move forward.